Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Wednesday, Fed Day, September 21st, 2022. Hope you had a chance to jump on our webinar yesterday. Had a lot of fun doing those. Pass it along to somebody who you think might care. We'd appreciate that. For today, we got equities on the green side, modestly. The bigger gains are in the commodity land. Energy, I think nat gas is up almost 4%, crude up 2%. Precious metals up a little bit as Putin calls up 300,000 Marine reserves. So the war to continue, it looks like. So yeah, obviously energy bid. You've got precious metals bid. You've got probably defense names, maybe a little more signs of life. Lockheed Martin, Raytheon really haven't done anything for months in terms of going up. They've just essentially gone down. Northrop Grumman has held in really well. All those are bid a little bit this morning. Sea Limited, SE, name out of Singapore, you may or may not know, big video game e-commerce company, shut down Latin American operations not too long ago. They said they're not going to be able to raise external funds and laid out a plan to achieve self-sufficiency or positive operating cash flow within the next 12 to 18 months. That's not, I don't know if that was after efforts to try to raise external capital and couldn't do it, or I'm not sure, but that doesn't sound like a great note. That's got implications for a lot of companies that are in that unprofitable camp. So keep an eye on that. That's interesting. I also think that the CEO is selling a bunch of stock, not at the highest. Walmart, long idea. 56% consumer staples, I think, nowadays, if I'm not mistaken, unlike a Target. So most people are getting what they have to get to feed their families and themselves at Walmart these days. Constructive comments on demand from the company. They also just stated that they're seeing minor improvements in inflation. I think they're gaining share as you got former high-priced grocery shoppers probably trading down to a Walmart. Not overly cheap at a 26 PE, but its last earnings announcement, if you look at the chart, was well received. Stock's been consolidating since then and still above the 50-day moving average. That might be a nice place to hide over the next 3 to 6 months. So check out WMT. And we don't own it. We may soon, but we don't yet. We own Costco. Fed Day, we're looking for probably a little bit of a relief rally out of this thing, is my guess. I think positioning is just so defensive and what have you that this thing can go for a little bit, maybe a day or two. I don't know. See what they say. But yeah, I would say expect a little bit of a relief rally coming out of this thing. And that's it. Have an awesome day, and we'll be back to you tomorrow morning.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.